training on our commission worksheet. So where I'm at, if you remember, we're in our shared folder where we have agent operations. We have items 1 through 6. Where I put this was in section 6 for resources. Now it says top one here, commission worksheet. The goal of this worksheet is to help make it so that you can calculate when you have a deal how much you're going to be making. We are also going to use this on our end as the brokerage to make sure we're calculating things correctly for us. So we're going to walk through just what that looks like. So on this worksheet, we have a nice little formula built out so that in the end you can see, hey, what my agent net commission income is. But there are some other things before that we need to take into consideration. So first we have our top here, a little key for some of the major items that we're going to need to know just in terms of terminology. So first we have our commission income. This is when you get something under contract and you see what is the commission income to the brokerage. Remember, technically all checks are paid to brokerages, not to agents. Everything has to be made out to Hearthstone Realty and then gets cut down to you. So the commission income is essentially the income and revenue that really comes into the brokerage. So if you're helping a client buy a $250,000 home, 3% commission, like we see down here in this example, is going to yield the brokerage $7,500 in commission income. Now, from there, we have some things to deduct if you have them, and some you might not have. So the next breakdown for making sure we calculate out revenue is if you have any referral fees that are being paid out, because then we'll have what's called our gross commission income, which is essentially commission income minus any costs that we have for referrals or sharing out to other folks outside of our brokerage. And so I put some examples over here on the side. I'm going to say, hey, referral fee can be paid to outside brokerages or to internal brokerage agents. So this could be an example is that it's very common in real estate that if you have a client moving to another state or location that you can't service or don't want to service, you can refer that client to another agent, and generally you can request a 25 to 35% referral fee. In-house brokerage referrals, I suggest we keep those at 25%. That's a pretty common spot to be, especially to keep the other person who's working it motivated to make the deal happen. But if you accept a referral fee at 30%, that's perfectly fine. The key is we know how much that is, and we take that off of the top because we don't want to end up paying your broker's split on that already. Otherwise, you're going to end up with less. So that's something that we pay out separately. So for example, let's say you work out a referral agreement. You've made an agreement with some agent outside the state. Hey, I send a lot of folks to your area. Will you take them on? And you say, sure, no problem. How about 25% referral fees? That will go right here. So let's say that you agree to take that for 25%. Then what this means is, hey, $1,875, which is 25% of a $7,500 commission on a $250,000 home with a 3% commission rate. We're going to send that check to that agent, which really means to their brokerage, separate. And then their brokerage will take care of their own splits and their own cost structure outside of that. Just know that 25% off the top is what the referral fee gets taken away. So if you have that, you can know. Now, using internal ones. Let's say, for example, within the brokerage, someone refers you a lead and you agree to take it and you've agreed on some referral percentage. And that's 25%. Then that referral amount, the $1,875, will go to that agent, and then based on where that agent is in their commission structure with the brokerage, they'll go ahead and pay their own splits, and you're just going to worry about your splits. This way, you're not having the brokerage cut come off of the whole, you're only having it come off of your piece. So this is where you'll calculate that, and it ends up with gross commission income. Let's say, though, it's your own deal that you've worked and made happen, which is ideally a majority of your deals. That's where you want to be. So all in is gross commission income. Next, though, are co-agent splits. This is a little bit different in that if you're working with an agent, you guys are agreeing to split a listing. Like, for example, I've done some of those with our agents where, hey, I'm going to give you 50% of the listing or the deal, and we're going to work it together. That is where this split will come in. So let's say we ended up doing a 50-50 split. This means that, hey, the other agent is getting 50%. Then that means, hey, $3,750 is going to get deducted and go to them. And then they're going to have their own cost structure after that for brokerage cuts, fees, and all that kind of stuff. Let's say you do a split with an agent where they're only going to get 25%. and you're going to keep the rest. For example, there can be, hey, if you have an agent who you're like, I'm going to have you work a certain part of the deal and we're going to give you this, or they're a newer agent and you're like, hey, I'll give you 10 or 20%. Let's go on your way and we'll get you trained up. That's a pretty common deal and a good one to have. Or if you have an agent, you're like, hey, I just want you to go do showings. I'm going to give you maybe 10% of the commission. Cool. Then there's a 10% that's going to that other agent, and you're ultimately going to see the $6,750. But again, let's say it's a deal that you're working all on your own and going through. Should be a majority of your deals. Maybe someone helped do you some showings and you just paid a flat fee though, or they did it for free because like if you ask me to do that, we'll just do it for you if it's a one-off kind of thing. So you're going to be keeping that whole amount. That's what we call the adjusted gross commission income. After all top line adjustments, your gross commission, the AGCI, is $7,500. Now, then we have the broker split. The broker split, as you guys have, of course, for agreement-wise, let's say in this case right now, it's 30%. And remember, that's on 30%, as I put in the little parentheses down here, 30% up to the first $100,000 in total adjusted gross commission income. So on this total adjusted gross, the amount that essentially you bring in to you, once that hits $100,000, it drops down to 10%. So essentially it's, hey, you're paying the brokerage up to $30,000. After that, you're keeping pretty much everything. The 10% covers roughly our cost to keep things rolling and to start pushing out some cool new marketing initiatives for you and everything. So with that, the brokerage split, the 30%, this is where it comes off. So if you're ever wondering where does that happen, it happens at the bottom line. That way, we're not taking it from you. If you had a referral fee, we're not going to say, hey, it's $7,500 commission. Brokerage is going to take its 30%. Then the referral is going to go out on top of after that. It all happens at the end. It ends up netting you more, which is how it should be because everyone else has their own fee structure and cost structure, and we want to get that out of the way first. AGCI, adjusted gross commission income, is the amount that is coming to you, attributed to you working that deal. The brokerage split then is taken from there, and then you have your agent net commission income. So this right here gives a good example of what an ideal typical deal should be for us. And that's, hey, you're going to sell a $250,000 home. It's going to have a 3% commission rate to bring in $7,500 commission income to the brokerage. And then you're not going to have any referral fees out, let's say, because you worked the whole deal yourself. You didn't accept it from someone within the office or outside the office. You work the whole deal on your own, with of course some brokerage support material and stuff like that, but you're working the deal yourself entirely. You end up with the $7,500. Then the split is taken from there. You're going to net out a little over $5,000 on a $250,000 home. Now remember, once you hit that $100,000 in total adjusted gross commission income, which I fully expect you to be able to do, then all of a sudden you're going to receive 90% of that. So this all of a sudden drops down to just 10%, and you're keeping $6,750. Now remember, a big one on top of this is you got to take away, this isn't just, hey, money to go burn and spend freely. Another discussion we'll have recorded is what to do with your commission income and how to handle taxes and other expenses. But for right now, this is an explanation of what to expect on this commission worksheet so that you can work out when you get a deal that you're working. You can go, how much should I see at a net level? This worksheet will help you work it. Or if you're deciding, hey, maybe I want to share this with another agent to get some work in, let me work through the example. Or you know what, maybe I don't want to do this deal. I want to work through the calculation of what if I just referred it out, because maybe it's an hour away from me, and if I referred it, how much am I going to make? Is it really worth the time, effort? Hopefully this worksheet helps you do that. Very simple format. All right, guys, hope you enjoyed this video. We'll keep making more. Take care. Bye-bye.